Right, traders, we are back again. Last week was kind of rough, so this week we had a little balance in our trading this week because we have one loss and one win, and the win overshadowed the loss to give us a little profit. So let's talk about the trade we took this week. This is the first week of October 2025. We are expecting to rise above the drawdown we had last month. Remember, guys, we had a drawdown last month, so it usually happens in trading. It's not every month that you win. So this month we are expected to make it this month. Like that's what we are expecting. Minimum, let's hit 10% trading the market this month. So we had two trades this week. We had one on the Forex pair and the other one on the crypto pair. So let's talk about the first trade, which was a loss, a bad one. So if what you can see right here, this is the New Zealand USD. On this day we got the signal to buy this pair. Okay, so on the 6th of October we got the signal to enter this pair, which we did based on our technical analysis and our fundamental analysis. Remember, we don't just cherry pick. We'll make sure that our algorithm is telling us to go when we want to go, so that we can manage it in such a way that we will not lose much if it's going to be a losing trade. So what happened to this trade? This is the New Zealand USD. It turned out that this trade was a very bad trade. The very next day, which was this candle right here on the 7th, the very next day, our exit indicator here, down here, gave us the immediate signal to leave this pair. Okay, so as you can see, this is what you are seeing. These lines here is our Fibonacci, where we place our stops and take profit levels and decisions levels. Okay, these are our decisions levels in managing position. On this trade, the stop loss happens to be here. Okay, at this level, that's where our stop loss is. So on this candle, when this candle closed, it didn't reach the stop loss, so it gave us some money. As you can see, at this position, this was when we closed this trade, because the exit signal called us out. Importance of using exit indicators for your trade. So we normally risk from this position to this position, which is 58 pips. We normally risk 5% of our account. So this trade, we risked 5% of all our account instruction given in our Telegram VIP room. So what happened there was that immediately the exit signal called us out. We left this position, and instead of losing 5% of our trading account the next day, we closed it on a 3.8% loss, almost 4%, but just 3.8%. That was half the amount of money we lost in our trading account. So it's important to use exit indicator to exit position whenever the market is not going in our favor, and something like this, that's when our exit indicator tells us, give us the best time to leave the market. So this candle was too heavy, so we allowed it to close before we closed our position. That was that for the bad trade, which is the New Zealand USD, the only forex trade we got this week. So the other one, we had another crypto trade this week, which we got on Thursday. On Thursday, this is the trade. As you can see, this is Ethereum against the US dollar. We got the signal on Thursday to sell this product for the Friday. Both our technical analysis and our fundamental analysis gave us the go ahead to sell it. And so what happened the next day, which is today, happens to be Friday today, this huge candle here, as you can see, went straight to our first and second take profit levels. And this position right now, we've closed the deal on this position, and they will gain about 6.1% profit on this particular trade. So if you do the math there, if you subtract 6.1 profit from 3.8% loss, that's 2.3% profit for the week. It's something tangible. So many people blew their account just this week trading on the lower time frame. You guys know we don't deal on that. We trade like the birds. We use the bird eye. We trade that. We look the market from above, which is why we are using the daily time frame in trading. Slow and steady. Avoid mistakes, to avoid market choppiness and noise in the market. All those news, impact and spread and source that will affect your account. That's why we look beyond all that, and to have our time too. As I'm making this video right now, I don't spend much time doing this. So this is how we normally trade on the daily basis. No wasting of time. Just go through the market and take our decisions. Within 30 minutes we are done. Then the whole or the rest of the day, have it all to ourselves. You don't even need to check the chart. You just wait for the market to close, and then you repeat the same step. So with that being said, let me show you what happened in the trading account, one of the accounts that I'm managing. So let me show you. It's a $25,000 account. So I'll show you the profit that was made. 2.3% profit made on that account. Let's see. Alright guys, this is a $25,000 account gotten from a client not too long ago. So what do we have here? We have $27,000 as the balance, because we made $645 as net profit. Like what I said, you see this trade here. This is the New Zealand USD that I bought this week. How much did we lose in this account? $915. And this is the Ethereum that we sold this week. How much did we gain? $1,560 profit. So if you subtract, add and minus, the net profit is $645, which is why it's being added to this trading account balance. So let's see, like I said, let's see how it goes. By the end of this year, you see how this account has been improved, because we are trading the normal strategy that all traders are supposed to be trading, slow and steady on the daily time frame. See you guys on the next video, where I'll be talking about fundamental analysis. Guys, you guys need to watch that video and see how we run our analysis in the economic data that the news event shows us. Alright guys, that'll be all for now.